certainly a lot to talk about other than sports, right? Of course, the Brewers headed to the playoffs, the Ryder Cup here in Wisconsin, the Badgers playing at Soldier Field, and the Packers play tomorrow night. Obviously, lots of great stuff happening, but what we want to talk about is something just as fun, and that's the Fed meeting notes.
Oh, Jerome Powell really, basically pleased investor at a very dovish call. He is a little bit more concerned about inflation than he had been previously, which I think is fairly obvious to most of us, that inflation has become more than transitory, which has affected the bond market and has affected the stock market at large. The other thing about the FOMC meeting was that basically the dot plots have moved into 2022, which is a little earlier than people had thought previously. But
and
again,
let me just jump in there, Professor. Dot plots are what?
The dot plots are what Fed governors perceive to be the path of interest rates going forward. And for the first time, the Fed and the bond market are kind of aligned, believing that interest rates may rise in 2022. But this shouldn't freak you out, because remember, just because we're tapering doesn't mean we're tightening. We're just putting less liquidity in than we did the prior month. That they did not say when they would do it. It's probably going to be data dependent. So we're going to be watching that next jobs report for cues as to what the Fed is likely to do.
A lot was said there. Okay, so tapering is not tightening. So the Fed now buys $120 billion a month of bonds. They may taper their purchases down to, say, $100 billion or $90 billion. That's the tapering part. Not tightening, as he said, means they're not going to raise interest rates. And let's not forget the fact that there's $30 trillion of U.S. debt in this country. And raising those interest rates means the higher cost to service that for taxpayers. And right now, the amount to service that debt is similar to what the entire defense budget is. So we'll have to watch where interest rates go. And one part that I think needs attention, Derek, is the fact that inflation is here, and it has not been transitory, as we have talked about for several months.
Right. We saw that the most recent jobs report, wage growth was 4% on an annualized basis, up. So that's a positive, but it is an inflationary, it builds in inflationary expectations, because it's really tough to cut people's salaries after you've increased them. And then the other thing is owner equivalent rent, which is a big chunk of CPI. Rent prices typically follow housing prices. We know housing prices have been extraordinarily strong, up 16% on a year-over-year basis. So if rents start to increase and people are actually kicked out of their apartments, which is becoming more likely now given that the foreclosure rules have ended, we could see a further pressure on inflation from that component as well.
And so we'll have to watch if this inflation is more sticky than what we've been told. We're starting to see some things that are catching our attention. For example, we saw that Nike reported one of the reasons they missed was because of the fact that their input costs were higher.
And that's primarily because there are factory closures in Vietnam, one of their key manufacturing relationships. And basically what's happened now is because of that, it takes 80 days for products to come from Vietnam to the United States. So for them, Christmas is toast.
So you got a factory that's shut down. You can't get it across the ocean.
Right.
And once it's here, we don't have the truck drivers.
That's right. So how do they transport? So as Derek just said, Christmas is toast. Thank you, Scrooge. But the real story is the fact that when you go buy something near Christmas time, it may not be there. So if there's something you're interested in, you may want to get in front of it and get it now, or start thinking about gift cards, because that might be all that's left. If you're hearing this right now, there is opportunities in this as well. When we talk about inflation and employment, all of these offer opportunities in other parts of the market. For example, is it shipping? Is it semiconductors? Are they vehicle sales that have been delayed? All of that means there are opportunities. There's ways to take advantage of it, and that means partnering with a fee-only fiduciary to look at your portfolio, understand what you own, why you own it, and how much you're paying for it.